Give us your take on what we saw this week, because as I say, there were some indications the markets were getting a little nervous about risk.
So I think the economic data was, at least on the margin, weaker than expected. PPI obviously came out a bit hotter than expected. And I think that there's just more realization that the path from here is to slower growth. Whether we ultimately find it's declared an official recession, as you and I have talked about, I think we're in already a form of recession. It's just of a rolling variety. We've seen the hit to areas like housing, to certain segments within the goods side of the economy, the areas that had the big surge in the early stage of the pandemic. That was also the breeding ground for the inflation problem we're still dealing with. That then went into recession-type conditions, disinflation in the goods side of the economy, housing-related, but we've got the offsetting lift on the services side, which services is a larger employer, so that has kept the labor market afloat. But I think we're going to continue to see weakness roll through the economy. And I think whether it's ultimately declared an official recession is almost an academic exercise at this point.
Lizanne, looking back on it, I think it's fair to say we had asset inflation before we had real price inflation for consumers. Has the Fed been successful in pricking the bubble on some of the asset inflation? You mentioned housing, for example. We have cryptocurrency that's certainly taken a hit. For that matter, big tech has come down. Are we starting to see some of those asset bubbles at least deflate a bit?
Crypto, SPACs, NFTs, certain, if not most, pockets of the housing market. To your point, big tech, other narrative-driven, speculation-driven areas like heavily shorted stocks, non-profitable, all of those, what we've been calling micro bubbles, undoubtedly have gotten not just pricked, but they sort of popped in spectacular fashion. You know, the good news is a lot of that speculative excess, even when we were in the heights of those bubbles, had not fully filtered over into the traditional market areas. And that's what we were always saying was very distinct from the current environment or the recent environment and, say, 1999, 2000, where the speculative excess was concentrated in the major averages. It's been just a little bit outside that mainstream, save for some of the big cap tech names. And I think it's just a valuation compression that was necessary in large part due to the inflation backdrop.
And yet, are we really fully seeing the effect of what the Fed is doing and saying in overall inflation numbers? As you said, PPI came in even a little hot this week. Consumer sentiment was sort of mixed, depending on whether the shorter term or longer term. And now we have CPI next week and the Fed. When will we start to see a real effect on inflation, do you think?
Well, in the case of a metric like CPI, of course, it's got a large component that is shelter related. So you've got the rent of primary residence, you've got owner's equivalent rent. Those components should start to roll over because there are sort of real gauges, actual rent gauges that we can all track. Zillow has one, Apartment List, RealPage, that have shown a significant rolling over in actual rents, disinflation in rents. It just takes a while for it to feed into the calculation of a metric like owner's equivalent rent. So I think it's coming, but it hasn't come as quickly as many would like to see. And there's other services-oriented components of the inflation data that just tend to be stickier. So we are seeing disinflation in some of the goods areas. We just have not yet seen the rollover in the services area. Now we've got another lift in wage growth, which is probably a bit unsettling for the Fed.
So one more here, if I could, Lizanne, and that is, unfairly, what we know a week from today we don't know today. We've got CPI, we've got the Fed coming out. We think we know what the Fed's going to say in terms of the rates. It's going to be 50 basis points. Will there be things that will actually materially affect an investor a week from today that we don't know today?
I think if anything, as it relates to the Fed, it'll probably be during the press conference. I think those are always a bit more interesting than what you glean from the statement. But also remember, it's a December FOMC meeting. So we'll get a new dots plot. We'll get a new summary of economic projections. So we'll get a sense of what the collection of opinions at the FOMC is about the trajectory. That doesn't serve as a roadmap by any means, but I wouldn't be surprised if Powell starts to get peppered more in the press conference, not about what is the terminal rate, when do you think we'll get there, the notion of a step down, will you do another 50, assuming they do 50, but I think he's going to start to get more questions about the length of the pause. And not just how long do you think it will be, but what are the conditions under which the Fed, once they pause, would see a green light to consider easing policy. I think that will be the next, call it, set of questions that will probably be more prevalent in something like the press conference.